What's going on, everybody? My name is Ryan. I'm here with a dividend investing video here on M1 Finance. This is my passive income portfolio. I'm currently at $6,439.83, up 6.03%. If we jump into my activity for this week, you'll see that I put in another bi-weekly deposit, $200, and had another 13 buys of these 13 companies. And so if you watch my other videos, you see that I do this every 2 weeks. Every time I get paid, I put $200 into this account, and M1 Finance will automatically purchase based on my allocations in my portfolio. So that's happening every 2 weeks. And it's been happening pretty much since I opened this around, there we go, April 28th. And so we're going to see this to continue to happen. If you look at my other videos, I was at 6,200, and it continues to go up. My earned dividends continue to go up. So in this video, it's going to continue in the series talking about my pies, and we're going to be jumping into my finance pie here. I currently have invested $882.52, allocating 15% of my portfolio into this pie. Currently, I've earned $15.77 in dividends from this pie in the past 3 months, and I'm going to continue to be collecting these dividends. So let's get into it. First, in the highest holding of my account, or this portfolio, in this pie, is Bank of America. I currently have $295.25 of Bank of America, holding 12.67 shares of it. And as you can see, it currently tells me that there's no gain and no return. It's kind of skewed because I own this in my Robinhood before I transferred it over, but I am down quite a bit, as you can see here. So if we jump over to Seeking Alpha and look at Bank of America right now, the current dividend yield is 3.09% with an annual payout of 72 cents per share. The payout ratio is 46.36%. It's a pretty sustainable payout ratio for the dividend. And here we are with a dividend growth of 4 years. As you can see, today is July 5th, 2020, and on 6/26 I received a dividend of 18 cents per share. And according to that, 18 cents per share, if we jump back, and I own that 12.67 times 18%, I got $2.28 dividend, which you can see here from them, which is the first dividend I received from Bank of America in this account. I really like owning this one. This is one of the big ones that Warren Buffett owns, and that's kind of why I jumped into it. But then even looking at the Seeking Alpha, you can see that it's a pretty quality dividend company to own. So heading back, our next one, People's United. People's United Bank, I've earned $4.62 in dividends. I own 25.67 shares. And again, this one is a little bit skewed. It says I'm down $23. However, my average share price is almost 16. It's trading at 11. So it's a little skewed, and I'm hoping that this can all get adjusted over time to show it more accurately. But let's jump over to Seeking Alpha. PBCT is the ticker symbol. Boom, boom, boom. Dividends. It's currently yielding 6.44%, which is kind of high. Most people generally shoot for 2 to 4%. But I'm not mad. I'm definitely going to keep collecting this one. Payout ratio 67.13%, which is still pretty good. Dividend growth for 27 years and 5-year growth rate 1.48%. I love seeing this. The higher the number here, the happier I am. It means that year over year, this company is able to grow that dividend consistently, no matter what. So 27 years since, what is that? 1993, this company's been increasing its dividend. That's incredible. It's, Y2K issues, 9/11, any of the financial stress, 2008, 2009, and even now through our previous market crash that just happened in March, this company's still increasing their dividend. So here we are with 18 cents per share, paid out quarterly, and in May I collected mine, which if we jump back, 25.67 shares. So if we do a little math here, 25.67 times 18 cents, collected $4.62 from PBCT back in May. And as you can see, that reflected here. So moving on, we've got Prospect Capital. Now this one's kind of a little bit riskier play. Some people disagree with owning this one. However, I like it. I've owned it for a while. I honestly haven't checked it out on Seeking Alpha, so we'll see how that goes. And boom. So this is a perfect example right here. So dividend yield, 14.26%. That is super high. Most people are not buying with that. Payout ratio, 99.31%. So this company is almost paying out the entire amount, or the entire amount of its revenue. It's paying out almost 100% of what it's making. So that tells me that this company can't sustain this for very long. Granted, they're still keeping, what is that, 0.69% of the revenue, which is not good at all. We want to see this number around 60 or less. Dividend growth, 0. So they haven't increased their dividend for at least the past year. And actually, they've been reducing their dividend for the past 5 years. I owned this for a while with Robinhood, and it was paying me 6 cents a month for owning it. And when it was only $5 a share, it was easy for me to jump into and start collecting a bunch of dividends. So, looking at all these, you can see that declared date 5/8, ex-dividend date 8/28. So it kind of skipped a couple months. So the dividend must be suspended. How do we figure that out? Dividend news. Goes ex-dividend, amends dividend reinvestment plan. Normally these show if it's suspended, so I'm not really sure what's going on with that. Sees potential for spreads, so LIBOR drops. 6 cent dividends. Amends dividend reinvestment plan. That's all dividends are due to common stock in the form of stock or shareholders who haven't elected to receive it. Newly issued shares at a 5% discount from the market value of the common stock. So as you can see, they're planning on paying out, they're reinvesting their own dividends instead of paying out. So, jump back to the scorecard here. So it looks like the next dividend that I'll be earning won't be until September 17th at 6 cents a share. So jumping back, 42 shares, 6 cents a share. Hopping on the math, 0.06 times 42. I'll receive $2.52 from PSEC on September 17th. Next, we've got Wells Fargo. Obviously, I don't have a whole lot of money invested in these companies. But like I said, the more money that I put in, the more it's going to keep increasing. So I'm currently up. This says I'm down. But if we look at, oh, that's right, I'm still down. You're right. So 25.34 is what it's currently trading at. And I bought in at 29.82. 1.38 shares. Jump back over to Seeking Alpha, the dividend scorecard here. And another perfect example of an unsustainable payout ratio. So the current dividend yield of Wells Fargo is 8%. It's pretty high. But we keep looking, annual payout $2.04 per share annually. Payout ratio 183.53%. This tells me that they're paying 183% of how much of their revenue. So how do they cover this other 83% on top of what they make? Well, it's with debt. And so a lot of times companies will go into debt to cover the dividend, to continue their dividend growth so they can get into the categories of dividend aristocrats, dividend kings. And then also, if people, a lot of times will see an 8% dividend yield and say, ooh, I'm putting money into that company. So it entices investors to put money in so that this company can continue to sustain operations. I'd like to see this number drop drastically, 120% less than where it's at. It's just not going to be able to continue this. The last dividend they paid out was on June 1st for 51 cents per share. If we jump back, 71. So as you can see, I collected on that about 71 cents for that dividend. At Wells Fargo, obviously, like this shows if this was just some small company that we didn't know about, I probably would not buy into it just because that's not sustainable. But Wells Fargo, I think Wells Fargo is not going anywhere. It's a huge bank. If we check out on the summary of this company, I mean, the growth here, it just tanked around March of 2020 where everything is going. It's got a market cap of almost $104 billion. This company will recover. It's just struggling quite a bit with our current situation in the market. However, it's generally sitting up here pretty consistently. So back to M1. Next company that I have listed in here is Main Street Capital. Main Street Capital, I currently own barely at all over one share here. Average share price $25.62, and it's trading at $30.70. So we'll jump back to Seeking Alpha. Main is the ticker symbol. We'll check on dividends and dividend scorecard. Again, same one, an unsustainable payout ratio, 124.24. We want to see that cut in half. 8% dividend yield, has a dividend growth of 4 years. They just declared a 20-cent dividend. It's paid out monthly. The ex-dividend is on the 18th, and it won't be paid until 9/15. So I can be expecting to get 20 cents from this company come September. And like I said, they pay out monthly. But as we previously discussed with the last company, PSEC, obviously it says monthly, but we're skipping. There's 5, there's 6, 7, 8, and 9 of no dividend payments. So what's going on here? Let's see. There's no information in the dividend news. And you can see even with these dividends, they're kind of all over the place too. 19, 27, 19, 20, 25, 20, 25. Dividend scorecard. Like I said, once we kind of get through this whole crisis situation, I expect to see this number back lower as it was before. And that's kind of the same way that it was when I was big into purchasing it. So now we have Aflac. Aflac's an insurance company. I'm sure everybody's seen the commercials with the duck. We'll jump back over to Seeking Out. Or actually, I own 0.62 shares. Jump over Aflac. That is the ticker symbol on this. AFL. AFL ticker symbol. Dividends. And check this one out. 3.18% dividend yield. Annual payout $1.12. Their payout ratio is 26%. That is extremely low, extremely sustainable. I'm not worried about this company having any issues coming up. 5-year growth rate 7.57%. It's been growing its dividend for 38 years. I haven't even been alive for 38 years. This company has been growing their dividends for longer than I've been alive at a 7.57% rate. So if this continues here, I'll be getting a raise every year from this company of 7.5%. So owning this company, they announced a 28-cent dividend payout for each dividend, and that was paid out on June 1st. It's a quarterly dividend, so I can expect another one come September 1st. 28 cents per share. I got half once, about 14 cents. There you go, 18 cents. So I had 18 cents paid out by Aflac. We go back, and I added American Express with a 10% allocation. I haven't had any money invested into this yet because we aren't able to put any extra into the finance pie because it's been buying into these other smaller allocated pies because they need to catch up to the other ones. So as you can see, that was my finance pie. Actually, I didn't even jump into AXP for you guys. AXP. American Express. We'll just check this one out real quick. I don't own any shares of this one. I don't own any of this stock at all. But it's currently yielding 1.8%. payout ratio 53%, totally sustainable. Dividend growth in 9 years, pays 43 cents per share quarterly. So hopefully within the next few weeks, or a month or so, if my account starts equaling out and I can start putting more money into the finance pie, then I'll buy into American Express just to build up this allocation and invest in this company. So with that, that'll be the end of this video. I just wanted to cover my finance pie. Next couple videos are going to cover the rest of these four: healthcare, telecom, industrials, and energy. So if you'd like to see what I've got in those ones, then definitely drop a like, comment what you'd like to see and what you have invested, and then subscribe to my channel so you can see when those videos are released, and you'll definitely be able to check out what I've got in my pie. So with that, thank you guys for watching, and we'll see you in the next video.